Good afternoon. This is the Chorus Call conference operator. Welcome, and thank you for joining the Tinexta Group consolidated results at September 30, 2022 conference call. As a reminder, all participants are in listen-only mode. After the presentation, there will be an opportunity to ask questions. Should anyone need assistance during the conference call, they may signal an operator by pressing star and zero on your telephone. At this time, I would like to turn the conference over to Mr. Josef Mastragostino, Chief Investor Relations Officer. Please go ahead, sir.
Thank you, operator. Good afternoon and good morning to the folks in the U.S. Thank you for joining Tinexta's 2022 first 9 months results presentation. Here with me today is Pierandrea Chevallard, CEO of Tinexta, and Oddone Pozzi, Group Chief Financial Officer. As a reminder, all the relevant documentation of the 9 months 2022 results can be downloaded from our company website in the Investor Relations section. For the purpose of this call, I will go over the 9 months 2022 highlights and updates. Oddone instead will go over the 9 months 2022 financial results, as well as the business units' performance, providing us with a deep dive. The last part of the call will be dedicated to Q&A. A recording of this conference call will also be available on the company website, and it will be posted upon completion of this call. At this point, I will kick it off by turning to page 3 of the presentation. 9 months 2022 results show continuing double-digit growth, providing support on our way to delivery for 2022. Please note that in order to allow as complete analysis as possible in this presentation, 9 months 2022 results are compared both on a like-for-like basis as well as on a 2022 base, which includes all of Tinexta's companies with the addition of the newly acquired ones. In addition, as we had mentioned during our last conference call, the 9 months financial comparison data has been restated, taking into account the disposal of the Credit Information and Management Division and emphasizing results on a continuing operations base. This, in other words, means that a more meaningful like-for-like comparison has been carried out between the years 2022 and 2021. On the P&L, for instance, you will find a line item highlighting at the net income level the results of discontinued operations. So, turning to revenue, they came in at 246.7 million in 9 months, posting a plus 92% versus prior year growth. EBITDA adjusted, which you all know by now excludes stock option and other non-recurring, is the better indicator for real performance, and it came in at 54.8 million, growing 17% versus prior year, mainly driven by digital trust and innovation and marketing services. EBITDA on a reported level came in at 49 million for the 9 months, growing 12%. EBITDA margin was mostly in line with prior year at 22%. And EBIT was close to 29 million euros, growing 15% versus prior year. Net profit of continuing operation came in at 18.5 million euros, growing 21% versus prior year, and net profit was 64 million euros, growing over 168% versus prior year, mainly driven by the net capital gain deriving from the sale of Innolva. Net financial position was 139 million euros versus 263 million on the fiscal year 21. This was strongly improved by over 47% versus fiscal year 21 on the proceeds from the sale of Innolva as part of the sale of Credit Information and Management. The leverage ratio, or net financial position over last 12 months EBITDA adjusted, was down at 1.65 times versus 2.67 times on the fiscal year 21. Adjusted free cash flow of continuing operation was 36.2 million, substantially in line with prior year, and on LTM base, adjusted free cash flow of continuing operation was close to 50 million euros. Going to the business line, most of the business lines continue to grow also in the 9 months 2022. Digital Trust grew 22% in revenue. EBITDA grew even more at 35.4%. EBITDA margin reached a very high 29% margin. Cybersecurity grew 6% in revenue, and EBITDA was close to 5 million euros, with an EBITDA margin of around 9%. Innovation and marketing services posted a very healthy plus 27% growth in revenues, and EBITDA grew 10.2%, with an EBITDA overall margin of 35%. In terms of the recent events and updates as you all know, we issued a press release on October 28th. Tinexta signed binding agreements with Intesa Sanpaolo relating to its entry into the share capital of Warrant Hub. The transaction provides for an investment by Intesa Sanpaolo to enter into Warrant Hub that currently holds 100% for a value of 55 million. These are the proceeds from the sale to CRIF of the stake of Innova. The investment in Warrant Hub will take place through a capital increase, as a result of which Intesa Sanpaolo will hold 12% of the share capital. The current strategic partnership between Intesa and Tinexta is confirmed and strengthened through commercial agreements relating to Four Values activities aimed at supporting Italian small-medium enterprises in their growth path. The closing is expected imminently, following the adoption of the resolution of the capital increase and the approval of the new bylaws. Upon completion of the transaction, 88% of Warrant Hub's share capital will be held by Tinexta, which expresses the corporate governance, and 12% by Intesa Sanpaolo. We will discuss, turning to page 4, all the different transaction details. We've just highlighted the third box, and I'm sure Oddone will complete any further questions that you might have. Going to page 5, most of the comments have already been made. I will leave it to Oddone at this point for any specific details.
Okay. Good afternoon, everybody. So let's walk through the results of at page 5, at the results of 9 months. Revenue is going up by almost 20%, both on organic base. It's up 6%, plus the increase driven by the acquisition we have made in CertEurope and Evaldi. Digital Trust, as we will see later on, went up more than 10%, but also cybersecurity, innovation, market services were up. The same, of course, also for EBITDA adjusted, that is up 16.6%, and the profit of continuing operation is going up more than 20%. If we look also at the adjusted free cash flow, the group continued to deliver a very interesting free cash flow that accounts for 36.2 million at the end of September. We move now to page 7, and we go through the P&L. The P&L of the first 9 months showed an increase of basic on a like-for-like basis of 6%, while the total increase accounted for 19%. In terms of profitability, the EBITDA is almost around 55 million at 22.2% versus 22.7% of prior year. On like-for-like basis is in slight decline, as during Q3 especially we have seen some revenue, especially in cybersecurity and innovation marketing service, that is going to move in the last part of the year. Definitely Q4 for cybersecurity and IMS is the most important quarter of the year, and even more is going to be this year. Non-recurring costs were above the previous year, driven by the significant, I would say even exceptional number of deals that we have performed during the year, while depreciation, amortization, provisioning are basically aligned with the previous year. Among the depreciation, we have to consider that 8 million of the depreciation are coming from the PPA, so we have the amortization of the rest is basically aligned to the level of CAPEX. Financial charges are above previous year, as they include also more than 1 million euro increased earn-out, driven by the better results delivered by the companies of the group. And overall financial charges are aligned with the previous year, driven by the fact that the group was able to hedge the interest rate, and therefore we account also 8 million of benefit as an asset during this period. Profit before tax is increasing compared to previous year, and therefore also net profit from continued operation. Result of discontinued operation already includes profit in excess of 40 million for the sale of Innova, while is not accounted, of course, the profit from the sale of Revaluta that is going to occur in the next months. I would move at this point to page 9 in order to review the financial and balance sheet results. The net capital invested dropped by 9%. This is driven by a mix of decrease by the sale of Innova for almost 130 million, and the increase driven by the acquisition we have done in Evalio, in Enhancer and Planet for almost 60 million euro. On top of that, we have to include the new leasing contract for the headquarters in Milan that accounts for 16 million euros. Net financial position basically is half of the year-end last year. This has been driven by several matters, as we can see here. Definitely very important free cash flow, not far from 40 million, and the disposal of Innova, as well as the share capital increase driven by the Bregal investment. But during the period, the group was also able to distribute dividends in excess of 20 million, as well as acquisition of new companies that we performed during this year. The shareholder equity is increasing of 32%, mainly driven by the Bregal investment in Infoset and reduced by the dividends of the period. If we move to page 10, we can walk through the net financial position. Like I said, the group performed quite an important number of acquisitions that are performing, especially Evalio, very well in the first 9 months. Evalio has been performed in January, and then we have the other deals that we have completed, like Enhancer, Planet, and the other small that are helping our growth. Dividends accounted for more than 20 million, as well as the adjustment to leasing contract for 8 million. In terms of cash flow, the cash flow is at 36.2 million, the adjusted cash flow from continued operation, very positive. Also, if we compare to previous year, was 39. We have to consider that last year we were able to extract 7 million from the working capital. This year is just 4, but so it's positive, but obviously this is lowering a little bit the free cash flow, but still stand at a very high level. The net financial position bridge, I would say at page 11, we can skip. Very important, we were able to lower from 2.7 times the ratio net financial position EBITDA to less than 2 times at 1.65. If we look at the work of the net financial position over the last basically last year on LTM basis, we see that the group was able to deliver almost 50 million of free cash flow from continued operation, quite very important amount, and to lower significantly also the financial charges. For the rest, I think we are talking about matters that we already addressed in the previous slide. Let's go now through the business unit performance. I will go to page 15, and we may go to Digital Trust. Digital Trust delivered another very positive quarter, and now at the end of 9 months, the revenue of Digital Trust is going up by 22% in terms of revenue and 35% in terms of EBITDA. Digital Trust confirmed their strong capability to handle the market, as well as to handle the profitability. So the revenue on organic basis was up 10%, and EBITDA is up from 15%. This is a confirmation the fact that there is a very interesting operating leverage on Digital Trust, and this is continuing. Digital transformation management was growing 40%, slightly above the off-the-shelf product that was up by 11%, and especially InfoSec is continuing to improving their presence on the large customers with a very interesting backlog of order and new customers. The Europe after 9 months is performing very well. Is basically meeting the target that we set at the beginning of the year, and we do expect the division to continue to perform very well also in Q4. If we move to cybersecurity, we can go through the analysis of results. The revenue is going up by 6%, slightly below our initial expectation, but still very positive. EBITDA is slightly going down, but this is a temporary situation. As we already shared during the first 2 quarters, during Q1, we started to increase significantly our investment in terms of resources in order to enable the future growth of this business. We are happy about the increase of the specific business of cybersecurity that is performing well. Our backlog of orders is improving month after month, and we expect to reverse the situation during Q4, where most of the concentration of the revenue, and I would say even more of profitability, is expected to be delivered. So as of today, this is the situation, but we are very confident that the situation will improve as expected during Q4. If we move to innovation and marketing services, we see here that revenue is going up by 27% and EBITDA is going up by 10%. Let's say that in this area we have a lot of very positive indications, especially in terms of revenue, that are coming from digital marketing for internationalization, as well as other ancillary business line to Finanza Agevolata Automatica. Finanza Agevolata Automatica is still performing at a very positive level, but not at the level of previous year. Part of the business has been shifted to Q4 from Q3, and obviously at the end of Q3 we have been affected by the different revenue margin mix between the different lines. Finanza Agevolata Automatica is enjoying a much better profitability than other business line, but we are expecting to deliver a much better result in Q4 to partially recover this shortfall in terms of profitability. Still, overall, this business line is going up more than 10% in terms of profitability. Thank you to Joseph.
Yep. To wrap it up, we're turning to page 19 of the presentation. As we all know today, in light of the results of the continuing operations, we are confirming the 2022 guidance in terms of revenue and adjusted EBITDA. As you can see, the figures are here. We're expecting around 23% in terms of growth for revenues and around 25% to 10% growth versus prior year for adjusted EBITDA, with a very enviable net financial position over adjusted EBITDA of around 0.6 times. At this point, operator, I would like to open the line for Q&A. Thank you.
Thank you. Excuse me, this is the Chorus Call conference operator. We will begin now the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. To remove yourself from the question queue, please press star and two. Please pick up the receiver when asking questions. The first question is from Renato Gargiulo with Stifel. Please go ahead, sir.
Yes, good afternoon. Well, my first question is on Digital Trust. The division showed a pretty good improvement, acceleration in the organic sales growth in the third quarter versus the first part of the year. Just wondering if you can give us any more color on that. Is it including any first positive impact from the recovery plan or cross-selling synergies with cybersecurity? Then second question on innovation and marketing services. Are you seeing any sign of slowdown in end demand for any of your end markets or customers, given the macro environment? You were anticipating an improving trend in the last part of the year beyond the typical business seasonality. How much visibility you have on that? We are in mid-November. I think that you should have a pretty good visibility. Maybe it's very early, but on the new Italian government, which is working on the new budget law, do you have any indication on potential implication on your business or innovation marketing services? Last question, following the sale of the Credit Info business, clearly you have a very strong financial position. Can you give us any update about your M&A strategy in terms of potential markets or targets by division? Thank you.
Give us a second, Renato.
Okay. So I start from the comments on Digital Trust. As we anticipated during our plan presentation in February, our goal was to continue on a very interesting pace in terms of revenue growth on organic basis, and we are confirming that, as well as our capability to leverage, the size of InfoCert, the capability of InfoCert are allowing to have an EBITDA growing much faster than the revenue. This is occurring since Q1, it has occurred also in Q2, it is happening also in Q3. The company is stronger and is capable to deliver this kind of results. It is a very interesting business. PNRR is not helping Q3 results, even though now have been started some major bids. So we are attending these bids as a raggruppamento in group with other companies, and in one case we were part of the group that won the first bid. This is something that will deliver revenues in the future years, but still is a good news to have started this, to have this opportunity at least as a backlog. So this is important. We will give more color, during 2023 or during the plan presentation when we will have more information about this. About the IMS, definitely we cannot say that, the GDP as is, working now, it's definitely worse than what we expected when we presented the plan. But any case, we are not, we cannot say that there is a major impact on that, so we can identify exactly which is the impact. Still, what we have up to now is a little bit a lowering of the Finanza Agevolata Automatica compared to previous year, but we are recovering on other business lines. So the revenue mix is less favorable from the margin standpoint, but as we know, during Q4 there is the major concentration of revenue of Finanza Agevolata Automatica, and this is what will help us in delivering the results that we are expecting. I would say, is much more challenge than expected, but this is what is going to happen. And even few million more of revenue could definitely give a much different color, as the margin on Finanza Agevolata Automatica is very strong. So the team is very committed. The first indication of October are positive and aligned with our last monthly forecast, so we are confident to deliver as expected. In terms of net financial position, like you said, we shared 0.6 ratio net financial position EBITDA adjusted by the end of the year. Obviously, this includes also the completion of the sale of Revaluta. This could happen in December, or whatever is happening is not an issue. The process is proceeding as expected. Obviously, we will be in a very positive position, as already shared with the market. We are continuously working on M&A with the same criteria we had during the year. So focus of international for digital trust. InfoCert, as part of the strategy, is looking for other deals around Europe, as well as potentially, after having completed couple important deals in IMS with Enhanced Replanet, still we are thinking that having an opportunity at international level to reinforce the presence of a Warrant would be very aligned with our strategy. For cybersecurity, we are very focused on the Italian market, and we are deeply analyzing the market, and we are in discussion with, as always, with several subjects, and so we do expect to continue and to be able to close a deal in the next quarters.
You had a question on the government and any particular news on the budget law. It's still very early, so we really have no major comment on that. Okay? Thank you.
Okay, perfect. Thank you. Thank you very much.
The next question is from Isacco Brambilla with Mediobanca. Please go ahead, sir.
Hi. Good afternoon, everybody. Just a couple of questions from my side. The first one is on IMS and implied performance in the final quarter of the year. You shared some indication on October trends and some qualitative updates on how you think the performance of the division to evolve in the coming months. Is there also any kind of data in terms of quantitative backlog which you think to deploy over the coming months? Just to
Exactly. Can you repeat that on what do you mean by qualitative, quantitative? What kind of detail do you want?
Well, if you have any data in terms of backlog for the division to be deployed over the next month, just to give a bit more visibility on the results you are embedding in your guidance for IMS in 2022. Second question is on Forvalue. If you can share the contribution in terms of revenues or EBITDA generated over the 9 months of this year.
So in terms of IMS, we really would like to stress the fact that the next 6 weeks the second part of November, all of December, as everybody's accustomed here in Tinexta knows that EMS in particular, warrant, has a very busy schedule, right? So we do see a very strong pipeline. You were referring to some sort of backlog, but for us it's a pipeline of number of actually transactions that we can complete by the end of the year. We're very confident that the pipeline is very strong, like it has been in the last couple of years. I think that you together with many others that know the story very well, know that the warrant is expected to very, very strongly deliver in the next 6 weeks. I think that are going to be, the most important elements. For value,
for value, as we develop a plan where definitely results were becoming, significant by 2023. This year, let's say we invested. First of all, we appointed a new general manager since July, and we are fine-tuning all the operation. I have to say that now with the sale of Innolva and the move of For Value from Innolva to Warrant, this at the end of the day is going to be a significant advantage because being Warrant the most important let's say customer for value, definitely having For Value directly 100% control by Warrant, this will help quite a lot. This year, obviously, and the following year, we are missing the contribution of Innolva to For Value, but I have to say that as of today, For Value is delivering results accordingly to our expectations. So I think we will have more color on this business starting from 2023.
Okay, many thanks, both.
You're welcome.
The next question is from Andrea Bonfà with Banca Akros. Please go ahead, sir.
Hello, good afternoon to everybody. My question is related to first innovation and marketing solution. If you can elaborate a little bit on the organic performance at EBITDA level, which I've seen was minus 9% in the first 9 months, which implies a minus 30 in the Q3, according to my calculation. This follows a Q2, which wasn't particularly buoyant. So I'll just some explanation on that point, and if you can comment what's the state of the art on the, let's say, integration process with all the asset of the cyber, because implicitly it seems that you need to deliver a strong Q4 in order, let's say, to converge toward your trajectory of let's say mid-term target. Thank you very much.
Ciao Andrea. As we said, Q4, if you compare Tinexta now and Tinexta when we had Innolva in the perimeter, it's clear that Tinexta is going to be a group where Q4 is going to be the most important, even more the most important quarter of the year. If we look to cybersecurity, when we look at IT companies generally they have Q4 as the most important year. If we look at IMS and especially Warrant, this is the most important quarter of the year because the customer has to complete their investment before the end of the year in order to be able to have the tax benefit in the following year tax filing. So this is the situation. If we look at 2022, what has happened in innovation and marketing service has been a postponement. We shared also during some meetings, some conferences we attending that we see many customers moving their investment finalization in Q4 compared to Q3, more than the previous year. So this is the reason why the Q3 fall in terms of profitability is driven by. We do expect, and results of level of revenue of October is encouraging. We do expect Q4 being able to recover very, very large portion of this delay. So this is the situation as of today. This is only related to Finanza Agevolata Automatica, because if we look at all the other business lines of Comarch, Querio, Comarch is going up 80% in revenue, Querio is going up 50% in revenue, European funding is going up 40% compared to previous year, training is going up too. So, this means that from the strategic standpoint, we have done the right steps. From the operation standpoint, the delay of some investment from the customer is delaying our revenue opportunity. We are very committed, the team is very committed, and we are confident to be able to achieve the results we are sharing with the market. Definitely, last 2 months also, a few days ago, I was talking with the CEO of Warrant. He was very positive on different other business lines, and so we are, running to do this. If we move to cybersecurity, the situation is that as we already explained during the year, we went through a significant investment of people. Basically, we hired among 30 to 40 people, fully specialized in cybersecurity, in order to complete, especially to complete our capabilities in that area. We are now happy about the level of incoming orders and sales activity we are performing. Now we expect to be able to convert the sale revenue by Q4, but I would say that we are going to open the 2023 with a much higher backlog portfolio of orders compared to previous year. So at the end of the day, for us, for this project, will be not important if we deliver 1 million more EBITDA in Q4 22 compared to 23. This is what could happen, but for sure Q4 will be much better than Q4 previous year, and then we are sure that we will open the 2023 with a much higher backlog compared to the previous year. We could even put in this way that this project has a delay of 6 months, whatever, is not is not changing the picture in the medium term, and so we are a little bit more under pressure of this. But at the end of the day, we have considered that we are still confirming results of the year that where the external environment is definitely different, because when we presented to the market, the war was not there, interest rates were not there, and having said that, we are still very confident that we will be able to meet the target, or to land very close to the target that we are sharing. We cannot identify a specific point of recession, of difficulties, and whatever, but obviously the general context is less favorable. Nevertheless, we are fully committed to deliver what we do expect.
Right, and to complete that, we remember this year was a very particular year where we actually sold one of the most important divisions, which is credit information management, with a capital gain which is going to be north of 80, 85, 88 million, right? So in terms of return to shareholders and therefore to the market, we also need to consider that this has been also a year where we've been extremely busy with the new M&A, with the projected M&A, with the disposal of a very important asset, and doing everything in a flawless way. So as Oddone was saying, the cybersecurity also needs to be looked at as a project that is in a transition period between when we bought it and what we expect to do in the midterm. Okay? Thank you for the question, Andrea.
Thank you, Andrea.
Thank you. If I may, is it possible for you to update us on what's the state of the state of the arts in the market for multiples in the digital trust, in the sense that I presume you are looking around in Europe to buy asset in the digital trust arena. Is the situation, starting to change in terms of what the seller or the potential partner is asking for, or they're still in the, let's say, in the high bracket kind of region? Thank you.
Yes. Well, we are dealing with some potential targets. Definitely, the asking is not dropping significantly as of today, since beginning of the summer. I have to say that for us, if we do see a very interesting opportunity, and we do see interesting synergies, now that we are expanding our presence also around Europe, for us it's very important the total return we may have, including also the synergies we may put on the table. Obviously, we are very careful. We will look at 360-degree the deal, but as of today, the asking is not very different. I would expect that when finally private equity will be in a position, as now, not to offer what they were able to offer in the past, we will see un ritracciamento, retracing of the requests. We will see. We are not especially worried. We look an investment on a 360-degree, how it fits, how it's helpful to complete our present, how much competence we are bringing on the table, and how much opportunity we will have to implement a digital transformation management also for the company we are going to acquire. On other segments, definitely retracing is there, and we are moving under this direction.
Right. To complete that, we're looking at the digital trust targets also in a function of potential synergies. I would like to stress the fact that Oddone and I were actually in Paris some time ago. Sergio Europe is doing extremely well. We highlighted this both on the press release as well as on the interim statement, where the enterprise solutions are now being fully being dispatched abroad. So we're looking at these targets also from a very more strategic standpoint than we did probably 5 or 6 years ago. So that needs to be taken into account also in the valuation of the multiples.
Thank you very much.
You're welcome, Andrea.
Welcome.
The next question is from Carlo Maritano with Intermonte. Please go ahead, sir.
Good afternoon, everyone. I just have a couple of questions. The first one is on the small bolt-on acquisition you completed this year. So if we exclude Evalue and Enhancer, you spent around 20 million euros in small bolt-on acquisition. I was wondering if you could provide us an idea of what could be the combined contribution on a yearly basis in terms of revenues from these deals. And the second one is on cybersecurity. If you can provide us more color on the different growth trajectory of the pure cybersecurity and the system integration part of the business. Thank you.
Yes, in terms of definitely in terms of profitability, the level of contribution of Enhanced Planet is going to be not particularly significant. You have to consider that overall we invested 30 million for the two companies. On average, their plan was in the range of 3 million, but one company was for 9 months, the other company for 5 months, so we are talking about probably slightly below 3 million in total. So this is what we expect from those companies. I would say very important is what we are going to deliver with Certa Europa and Eraso. These are the very bold acquisitions we have done, and we are completely happy as of today of what they delivered. They are perfectly delivering as expected, and definitely the plans that we put together for the two companies were quite challenging. So I would say that this is positive, is a positive record that is helping us, to be even more convinced on our strategy to go international. In any case, I think we are working, trying to integrate all the companies and try to implement our strategy.
Yeah, Carlo, did you have a follow-up, or what was the other question on cyber? And then
Yeah, the second one was on cyber. If you could provide just an idea of the different growth trajectory of the pure cyber security, so Yoroi, Swascan compared to Corvallis, just to understand.
Yoroi and Swascan grew quite significantly. We are talking about not huge number, but we are talking about a growth in terms of revenue of in excess of 30%. Obviously, we are talking about small numbers, but still important. For Corvallis, pure digital, the first 9 months, we can say that more or less the revenue is aligned. The point is that compared to previous year, we have this investment of new people in the cyber security that has a level of revenue as of today is not yet covering all the costs. During Q4, we expect this is going to be reversed and being able to having also this investment to be profitable.
Okay, thank you.
You're welcome.
You're welcome.
The next question is from Russell Pointon with Edison. Please go ahead, sir.
Good afternoon, all. I have 3 questions, if that's okay. First one, on cybersecurity, you talk about a margin of and revenue mix. Could you give some quantification of how great each of those was in terms of the impact on the margin, and give some indication of how those things will switch around in the coming quarters? I presume the investment drops off and the revenue mix probably improves. And could you give some indication of the relative margins which you're talking about when the revenue mix is being affected that way? On search, the numbers, it seems to be generating similar amount of revenue in Q3 as Q2. So is there a different kind of seasonality in Cert Europe versus the rest of Digital Trust? And in particular in Q3, the EBITDA margin looks to be about 50% on Cert Europe, which looks quite high. My final question is on you bought back some shares in the quarter, and you alluded to this earlier in terms of capital returns. It's been a busy year with respect to M&A, but could you just remind us of how you think about repurchasing shares, especially given where the share price is versus Thank you.
So, Russell, let me start with the first one in terms of cyber. We already had mentioned it before. I don't know if you had caught it, but we're more than happy to repeat it. So there's a couple of moving parts here, right? So first of all, the more traditional cybersecurity businesses, such as Swascan and Yoroi, or growing in line with what the market is, that means double digits. So that is a very, very, I would say, supporting statement that we have. In terms of implementation services, and therefore namely Corvallis, the situation is particularly drained by the fact that we've invested at the beginning of this year throughout Q2, and therefore we have let's say, more of a bulk to come in the fourth quarter. So projections in terms of EBITDA are very, I would say, it's pure math. If we did less in Q3, obviously the overall sum of the marginality for Q4 will have to be much more important. So that is how things are going. Remember, the project of cybersecurity needs to be looked at since we bought the division in the 2-year, 3-year plan. So as we were saying, we want to be very confident that the pipeline of backlog and the pipeline of business is now more towards Q3, Q4, and therefore we will start the year in 23 with a much more broader, I would say, pipeline. So it's just a matter, I would say, of timing. You were actually asking us also about CERT Europe. I think we discussed upon the fact that CERT Europe is doing very well. It is contributing very strongly to the top line of Digital Trust. The very important news is that we are now pitching the enterprise solutions in France, because it is very important that we are looking at CERT Europe not just as a vehicle to sell the solutions from InfoCert, but also to start selling the enterprise solutions, which will bring an increased sort of contribution also in the fourth quarter. And I mean, Digital Trust per se is growing 20% on revenue and 35% on margin. So we are fully in line, if not even better, in terms of operating leverage. So I wouldn't really worry about that. In terms of the buyback, I mean, we started the buyback for a couple of reasons. It's been going on now for now. Number one reason, obviously, is to return capital, because at this point it's a way to remunerate shareholders. But at the same time, we remind everybody that we have a stock option plan that needs to be serviced, and therefore the buyback program is emphasizing also that, and I think it's fully in line with the current valuation. I wouldn't add anything else. So
nothing. Just maybe in order to add Russell on one matter, by the end of the year, we do expect that the pure cybersecurity business will be in excess of 20% EBITDA margin. So exactly aligned what we do expect. The rest of the business will be even aligned to the margin we forecasted. What is probably been a little bit different from what we projected at the beginning of the year was our capability to hire a significant number of people and to put them in the virtual circle of generating of revenue. Probably this is taking a couple of quarters more than we expected. Well, this is the difference. It's not that there is anything that is not going as we expected. Probably it's the timing of implementation that is taking more time.
That's pretty much it.
Okay, so can I just come back on the margin? It's down by about 2.5 percentage points on 9 months. How much of that margin decline is due to in staff, etc., versus the changes?
I have to say that it's mainly driven by what I explained, and partially because we are delivering, 90% of services, or probably 95% of services, and 5% of product. Product has been lower than expected in Q3, and we expect to sell more products in Q4. This will help, is the reason why the margin is a little bit, because when you sell a product, is full margin. We sold less product in Q3, we expect to sell a little, but we are talking about 1 million, but 1 million is making the difference in terms of margin there.
Okay, thank you.
You're welcome. Thank you very much for connecting to Tinexta conference call. If you have any other information, we're more than happy to connect. Thank you and have a good evening.
Thank you, everybody. Thank you. Bye.
Bye.
Talk to you soon.
Thank you. Bye.
Bye.